What if I told you that with just $30,000 and 3 simple ETFs, you could build a fortune worth over $9 million? No day trading, no Wall Street tricks. Just smart money management, the power of compound interest, and a strategy so simple that even beginners can follow it. Think about it. Dave Ramsey talks about living debt-free, and Warren Buffett has proven that patience in the stock market beats chasing quick wins. Both agree on one thing. Wealth is built over time, not overnight. That's exactly what we're diving into today. The truth is, ordinary people are already turning small investments into life-changing wealth through dividend investing, smart retirement planning, and carefully built investment portfolios. Over the next few minutes, I'll show you step-by-step how $30,000 invested into just 3 ETFs could grow into $9 million by simply letting compound growth do the heavy lifting. No stress, no guesswork, just disciplined, long-term wealth building. This is more than financial education. This is your roadmap to passive income, wealth creation, and ultimately, true financial freedom. By the end of this video, you'll understand precisely how to build an investment portfolio that could secure your retirement, transform your family's future, and create lasting financial security. Welcome to Trailblazers Mindset, where wealth builders come to get inspired. Let's dive in. Firstly, it's important to note that when searching for the best long-term ETFs, it's easy to get caught up in the excitement of what's hot right now. That's why the 10-year return is such a powerful tool. It cuts through the noise and shows how a fund has really performed, through market booms, downturns, and even full-blown crashes. In simple terms, it answers the question, can this fund stand the test of time? If your goal is steady, long-term growth, that's the answer you need. Focus on long-term results for confidence, while using short-term trends to fine-tune your timing. If a fund is underperformed, that could be a buying opportunity. If it's running hot, consider easing in with dollar-cost averaging to manage risk. With that said, it's time to dive into our ETFs. And our number one ETF is the Vanguard Information Technology Index Fund ETF, ticker symbol VGT. If you believe in the future of technology, then VGT is a fund you can't afford to ignore. This powerhouse ETF is managed by Vanguard, one of the most trusted names in investing. Instead of trying to beat the market with risky bets, VGT uses a smart indexing strategy designed to mirror the consistent growth of the U.S. technology sector. VGT is exciting because it is a pure play on innovation. It focuses exclusively on America's technology leaders, the companies shaping how we live, work, and connect. Inside this portfolio, you'll find giants in electronics, computers, and cutting-edge tech, along with mid-size and smaller innovators driving the next wave of breakthroughs. VGT demonstrates strong historical performance through 3 key metrics. The fund pays an annual dividend yield of 0.66%, which grows at an average rate of 14.68% per year. Additionally, the fund experiences an average share price appreciation of 17.90% annually. Now let's dive into the $10,000 investment projections. By the 10th year, the $10,000 investment portfolio would have increased to $54,471. This significant growth demonstrates the power of compound returns over a decade, with the investment increasing by more than 5 times its original value. After 20 years, $10,000 investment portfolio would be worth $292,729. This represents nearly a 30-fold increase from the original $10,000 investment, showcasing the long-term wealth-building potential of consistent technology sector investment. And my favorite, at the end of 30 years, $10,000 investment portfolio would have increased to an impressive $1,557,905. At this point, the investment would generate $3,368 in annual dividends, providing substantial passive income. The analysis demonstrates how a single $10,000 investment in VGT could potentially grow to over $1.5 million over 3 decades through the combination of steady dividend payments, consistent dividend growth, and substantial share price appreciation in the technology sector. Do you think this is fascinating? Well, stick with me, because in a few minutes I will show you how one ETF, just one, not 2, could generate over $5 million with an appropriate strategy. Our second ETF is the iShares Semiconductor ETF, ticker symbol SOXX. The iShares Semiconductor ETF is managed by BlackRock. This specialized exchange-traded fund tracks the performance of the ICC Semiconductor Index, which consists of companies listed in the United States that operate within the semiconductor industry. This ETF provides investors with targeted exposure to one of technology's most critical and rapidly expanding sectors. The semiconductor industry serves as the foundation for virtually every modern technological advancement we see today, from the processors in smartphones and computers to the chips that power electric vehicles and sophisticated medical devices. The fund maintains a highly specialized approach by focusing primarily on component securities within the semiconductor index. This narrow concentration gives SOXX a laser-focused investment strategy centered exclusively on semiconductor companies. Due to its concentrated approach, SOXX is classified as a non-diversified fund, meaning it can invest larger percentages of its assets in fewer securities, rather than spreading investments across many different sectors. This focused strategy comes with an annual expense ratio of 0.35%, which represents the cost investors pay for professional management of the fund. With regards to its performance metrics, SOXX demonstrates exceptional performance through several key financial metrics. The fund provides investors with an annual dividend yield of 0.74%, and these dividend payments grow at an average rate of 11.45% per year. Most significantly, the fund's share price experiences a robust average annual appreciation of 19.8%, making it one of the strongest performers in the technology sector. Now let's examine how a $10,000 investment in SOXX would perform over various time horizons based on these historical metrics. By the end of the 10th year, the investment would have reached $63,565. This substantial growth shows how the $10,000 would increase more than sixfold over a decade, highlighting the compounding effect of consistent high returns in the semiconductor sector. After 20 years of growth, the portfolio would have increased to $394,091. This remarkable expansion represents nearly a 40-fold increase from the original investment, demonstrating the long-term wealth creation potential of focused semiconductor investing. Now my favorite, at the end of 30 years, the initial $10,000 investment would have grown to an impressive $2,417,862. This extraordinary growth showcases how patient, long-term investing in a high-performing sector can create substantial wealth over time. The fund's impressive historical performance metrics suggest strong potential for long-term wealth building for investors willing to accept the focused exposure to semiconductor companies. Before we continue, if you find value in this video, please hit the subscribe button to join our growing community. We appreciate your support. Thank you. Our third ETF is the VanEck Semiconductor ETF, ticker symbol SMH. This passively managed exchange-traded fund provides investors with comprehensive exposure to the United States semiconductor sector by tracking the MVIS-US-listed Semiconductor 25 Index, which encompasses American-listed companies operating within the semiconductor industry. SMH operates with an annual expense ratio of 0.35%. The fund maintains a focused investment strategy by concentrating primarily on U.S. semiconductor stocks, targeting the major players that drive innovation and growth within this critical technology sector. The fund's portfolio includes some of the most recognizable names in technology, with top holdings featuring industry giants like NVIDIA, Taiwan Semiconductor Manufacturing Company, Broadcom, Qualcomm, and Micron Technology. These companies represent the cutting edge of semiconductor design, manufacturing, and innovation. With nearly $20 billion in total assets under management, SMH ranks among the largest funds in the semiconductor space. However, the fund exhibits a top-heavy structure where over two-thirds of its total assets concentrate in just the top 10 holdings. This concentration means that a significant portion of the fund's performance depends on these major companies, creating both opportunity for substantial gains when these leaders perform well and increased risk if they experience difficulties. SMH demonstrates a unique performance profile that emphasizes growth over income. The fund provides a modest annual dividend yield of 0.48%, which grows at an average rate of 12.99% per year. While this dividend yield appears relatively low compared to income-focused investments, SMH's true strength lies in its exceptional capital appreciation potential. The fund's outstanding feature is its impressive share price growth, which has averaged 22.89% annually over the past decade. This remarkable appreciation rate significantly exceeds most traditional investment options. Now let's examine how a $10,000 investment in SMH would perform over various time horizons based on these historical metrics. By the 10th year, the investment would have increased to $80,583. This impressive growth shows how the original $10,000 would multiply by more than 8 times over a decade, highlighting the powerful compound effect of consistent high returns in the semiconductor sector. After 20 years, the investment portfolio would be worth $638,731. This extraordinary expansion represents more than a 60-fold increase from the original investment, demonstrating the remarkable wealth creation potential of long-term semiconductor investing. By the 30th year, my favorite, the initial $10,000 investment, would have grown to an astounding $5,033,411. Let me repeat that again, $5,033,411. This phenomenal growth showcases how patient, long-term investing in a high-performing sector can create life-changing wealth over 3 decades. Consider this. While others debate whether they can afford to invest, you could be positioning yourself for life-changing returns. These 3 high-growth ETFs can potentially grow your wealth to over $9 million in 30 years. These aren't fantasy numbers. They're based on historical performance metrics of established funds. The semiconductor revolution isn't slowing down, it's accelerating. Time is your greatest ally, but it's also your scarcest resource. The gap between those who act and those who hesitate widens exponentially over time. Take the time to do your research and take the appropriate action. If you're serious about building real wealth, then consider this channel as your financial gym. Every video is a workout for your portfolio, your mindset, and your money skills. If today's video helped you level up your financial education, even just a little, please smash that like button and subscribe so we can continue to grow and build wealth together. If you are interested in how savvy investors are turning $20 a day into $1.4 million, check out our video on that topic. The link is in the description. Please note that we are not financial advisors. This content is for informational purposes only. Click on the next video on your screen. We appreciate your support. Thank you.